If you are tired of overtrading, or you are tired of forcing entries and tired of losing money randomly, then this is the exact setup I wait for every single day. Most traders lose not because they don't know what to do, but because they trade everything they see on the chart. I don't do that. I wait for one clean setup, one confirmation, and one clear entry. Today content is gonna be under these few steps. First of all is how to identify the daily time frame bias, which candlestick, which time frame are more required in the aspect of identifying your daily bias. Step two is wait for the right time. Some of you guys don't really know the right time to trade, when to trade, and how to trade. Which is the right time? I'm going to show you guys the perfect time in which volatility occurs in the market. I'm showing you guys in this particular video. So the third step is the liquidity sweep. Some of you guys might see a change of character and call it a liquidity sweep, or a break of structure and you call it a liquidity sweep, or you just see something like equal highs or equal lows and you also call that a liquidity sweep. We have so many type of liquidity sweep, but I'm not going to go into details. I'm just going to show you how all these comes together to form one particular A plus setup. That is what I'm going to show you guys in this particular video. So the first step is the market structure shift. This is the core important setup. This is the core important part in this particular setup, because without a market structure shift, we are not going to know if we are in a bullish market or in a bearish market. So therefore, we need to understand the market structure shift and its movement for us to be able to create or validate any particular setup. The fifth is our entry. Without a clear entry, I don't see any reason of you entering any trade. So you need to define your entry. While you're entering the trade, your stop loss level and your take profit level, all of them must be clear and set without any mistake. The sixth one is the execution rules. Trading is a business, even though more likely to be more about psychology part. You can't be reckless and trying to make millions from the market. You need rules. Even in some office space, they need rules. They have rules. You come by 8, once you are late, you answer query. Same goes to trading. Any mistake you do, you're going to pay with your money. You pay directly with your money. So if you can't afford making so many mistakes, then I think it's time for you to calm down and watch and learn from this particular video. Now, let's talk about identifying the daily bias. Now, so many people have different scenarios on how they used to identify their own daily bias. But as for this particular setup, the higher time frame in which we use is our 4-hour time frame. The 4-hour time frame is the higher time frame that we are using to identify the daily bias of this particular setup. Now, in the 4-hour time frame, we'll be looking at if our market is the bullish market or in a bearish market, series of higher highs or lower lows. Now, in this particular picture, you can see that after that last change of character to the upside, we have another change of character again to the downside before seeing series of break of structures and break of structures to where? To the downside, stating that we are bearish in this particular market scenario. We are bearish, and as us being bearish, we'll be looking for what? A sell positions. In the aspect of time, we are not trading in the Asian section or the New York AM section, but our main focus here is the London section. Why? Because London section has the high probability in times of volatility, because during the London opens, the market used to move vividly, used to move rapidly. You can be able to catch so many sweet movements. We believe that the Asian section is all about ranging, the London section is all about manipulating, and the New York AM or New York PM is all about distribution. So for you to be able to catch a perfect move, you need to set yourself in a perfect time and a perfect area of trading. Extra section is not normally traded because of its high ranging momentum. We don't trade that because there's no need of trading it. but the London section is the perfect time. Now, the time when Asian forms is from 1 a.m. in the morning, Nigeria time. We're using Nigeria time here because I'm in Nigeria. So it's from 1 a.m. in the morning to 5 a.m. That is a perfect time when the Asian sections forms. Now, the London section started from 8 a.m. It starts from 8 a.m. to 12 p.m. I did not say that is when it closes, you understand, but that is the main core moment, the main core time you need to be focusing. The New York section starts from 12 p.m. to 4 p.m. So now, as a trader, your focus will be in the London section, what the market does from 8 a.m. to 12 p.m. The market always duplicates what it has already done during the 1 and 5 a.m. candlestick. Do you understand? So now, the third step is the liquidity sweep. Now, after marking out your 4-hour candle time frame, which we have gotten for the Asia section from our 1 a.m. to 5 a.m., you mark out the high and the low. This will serve as our liquidity area where there is money, where price need to sweep before giving us any directional move in the market. If there's no sweep of this liquidity, no entry. Looking at the other picture, you can see the 50-minute time frame candlestick, how everything was ranging, you understand, before seeing that particular bearish movement that breaks the liquidity below. That is what we call what? Our liquidity sweep. That is a perfect example telling us that price already swept the liquidity below and is about to change direction towards to the upside. So what are we expecting? Our market structure shift. Looking at the left side, you will see that particular liquidity sweep. After a sweep to the downside, what are we expecting? We are expecting a push to the upside. What validates it is the market structure shift. Now, if straight back to the right side, you can see how the market structure shift formed. After the liquidity sweep to the downside, we wait for what we call the double bottom, and after the double to bottom, price break structure from the latest high and retreats down to that other block. That is our entry point. You can use your order block or your fair value gap as any entry point, but as a smart trader, we choose other blocks. Other blocks with a little touch of fair value gap, which means a fair value gap must also be intact before you are able to see the other block. This alone is going to make your entry more valid and more strong. I hope you guys understand. So now, this is our executional rules. Now, first of all, is one setup a day. Surely you're going to be seeing setups like this. Yeah, but for you to be able to filter them, that is going to reduce your trading probability to one particular setup per day. Secondly, is no revenge trading. If you lose that particular setup, even after getting everything right, then you close your system, you close your phone, and you go on with your day. No chasing entries. We don't force entry here. So we set our traps and we wait for market to directly fall into that our particular trap before us hitting the buy setup, the buy button, or the sell button. Now, if you miss any trade, you've missed it. Don't chase it. Don't run after it. Calm down. Set on that trap. Price will surely come to that particular place and then you will strike harder and you will strike once straight to take profits. This is the first example. You can see that we have this is our Asian section, our Asian range. From here to here is our Asian range. You understand that, guys? So after seeing this Asian range, we can see something like a change of character, a sweep of liquidity, not a change of character, a sweep of liquidity to the downside. And if we are seeing a sweep of liquidity to the downside, our focus should probably be more of a buy. You understand? So after seeing that, you need to mark out your market structure shift. This will be our latest high, and price need to sweep above it and return to any fair value gap or other block below before giving us a clear buy entry. Now, after marking this out, okay, you mark out your order block. Remember that order block, the last bearish candlestick before this bullish one that imposes this particular move. You mark it out and you set your entry. Your entry must be defined. Your stop loss must be exactly below this particular man here. That is where your stop loss must be. After that, your TP must be above here, above the eye of this particular London section, or you can check the previous section eye for you to be able to mark out your TP level again. This should be here. Now, this is a clear 1:4 risk to reward ratio. You can be able to catch setup like this on a daily basis from different pairs, and you are still going to be profitable at the end of the month. Remember, this was our range, this was our London, this was the movement, audio movement, audio change of character or liquidity sweep. Every movement formed inside this particular London, not in the pre-London section, but inside this London. That is why it is important. You understand? That's why it is important, because everything needs to be formed inside London for us to get this particular perfect catch or this particular perfect move. Guys, this is another example of this particular setup formation. Another example, you can see now that this is our normal Asian range from here to here, and our break of structure to the upside happens inside pre-London. This is invalid. That is invalid. You can be marking this as our order block to enter as your entry. Price will just tap you in, give you a little profit, and before you know it, boom to SL. You lose that particular trade. But timing matters in this particular setup formation. This is invalid. We need everything to happen inside this London area, and this is it here. This is our change of character to the downside. You can see it. This is another change of character to the upside. Now, this is the change of character that validates everything, that we are actually what? We are actually buying. Now, after the change of character, we mark out our order block. Then we set our trap. Our SL should be below this man there, and our TP, we can use our previous day, which is here. Take it up to here. This is another 1:6 risk to reward ratio. I've shown you guys two clean example with a perfect risk to reward ratio that backs it up. If there's no perfect risk to reward ratio that backs it up, that means you're in a losing side. You understand? So I can keep on showing you guys example upon example upon example upon example. Do you understand? And this is a perfect one. Look at here. Now, do you understand anything in this particular setup? Price swept down, liquidity downside. Yes. After the downside, what are we expecting? We're expecting to buy, right? Now, if you can look at it from here, you can see that this is our shift. Yes, we had our shift, but it didn't happen inside of London. It happened outside of London, the pre-London. So this is a trap. Guys, this is a trap, and price did what? Break below it and gave us a what? A push to the downside. This is what we call break and retest, and boom, price starts dropping to the downside without even giving us our clear entry to the what? To the upside. So guys, see you guys in the next video, and don't forget to like, subscribe and share.